risk indicators, our quality of portfolio. Yes, let's see. Yeah, you can see that our portfolio at risk has been increasing significantly from 2019. Yeah, to now. Now our current portfolio at risk is 12.3%, which can be a source of concern because we are a little bit higher from the benchmark, which is 10%. But we understand, of course, that this might be due to the pandemic, to the crisis, and that is why our clients have been facing issues with the repayments and that have been in delays in the repayment. However, we don't want to. We haven't lost faith on our clients, so we are expecting that this situation will improve in the second half of 2021. Yeah. So we are trying to accomplish this objective. You can see as well. It's important to mention our risk coverage ratio has been around is around 60% in this period, and of course we have some explanations, and it's mainly if the situation of COVID doesn't improve for the second half of 2020, we are considering increasing our loan loss provision. This is important to say. So we are better prepared for these arrears or this risk that we are facing right now. Okay. What else? If we can talk a little bit about our operational self-sufficiency, you can see that in most of the periods, it has been more than 100%, which I think it's a very healthy operational self-sufficiency. Also, we want to point out the fact that our lower net income, from the past period, especially because of the pandemic, and also an increase in equity makes our return on equity look a little lower. There is a decrease, but this is not necessarily a bad thing because, of course, we are increasing our equity, which we'll see later will allow us to get better sources of funding in the future. So let's keep that in mind. And as you also can see, our next to this graph, our productivity of staff. Yeah, we have an interesting productivity of staff now is higher than the industry benchmark. We have a staff productivity over, I think, by far over the 150 usually that we have in the industry for productivity loans, number of borrowers divided by. It's a number of active borrowers, divided by our staff members. So I think it's quite interesting, that part. Also, we have higher by far a productivity for loan officer. See, we have been trying to do our best to be as efficient as we can, as you can see in this late period of crisis. And also, if you see our operation expenses. Yeah, our operation expenses have been. We've been trying to do all our efforts to reduce our operating expenses. You can see from 2018 to 2021, we've reduced from 19.4% to 14.7%. We are not making huge profits as well, as you can see. We are just trying to break even. Yeah, because we think that that should be our goal as a social also enterprise or hybrid business. So we need to keep that in mind, our social mission. And this also is important to mention that we haven't been paying an interest and a very interest level of interest rate on our deposits. So we are doing a very good incentives for our depositors to keep their money in our institution. Yeah, we are paying.
I will show that one. So you are referring to the
to the extra
information of the interest rates that were paid. I will just increase it. Then you can show it to the clients.
Yeah, so we have been paying, as you can see, is around 6 or 7% on deposits, which I think it's very it could be a very good incentive for depositors. You can see there, yeah, we are in 6.2%. And of course, we are borrowing some. We have been borrowing some money from other institutions as well, which makes our also our funding rate higher. No, we're paying right now between 9 and 10%, which I think it's quite normal. And also, I wanted to point out the fact that if you can see our funding structure, yeah, we are moving to the last part of our presentation. If you can see our funding structure, I think we have an interesting level of equity. Yeah, we are higher 30%, which I think it's interesting. We're a healthy level of equity, which allows us to expect for a better funding sources in the future. Yeah, we are getting most of our funding from our borrowings, of course, our debt. Yeah, but still we have a good level of deposits and also a good level of equity, as I just said. And for future, we want to improve this. We want to improve our savings products for our clients, and we want to access to cheaper sources funding, so we can keep putting all this money in our loans, which is our main source of operations. And last thing I would like to say is I would like to hear our clients' point of view, because we have been doing our best to serve them well. But if they have some suggestions, we can also take them into consideration to improve what we have been doing.
Fernando, thanks very well. But before I give the floor to others and also people of your staff, can you just, for the recording, I just started the recording a little bit late, sorry for that, but can you just repeat, and we have the full version of your analysis of the beginning, just a part of the increase, and when you said related to the corona and about the increase of change of rural to more urban, if you can just repeat the beginning.
Of course, yes. So we were talking about an increase in our average loan size, yeah, and also a decrease in our number of borrowers. So, of course, maybe we can think we have focused on better of clients. That would be the first explanation. But our argument for this is that we are serving clients in urban areas right now mainly because of the crisis, and because of this we are assuming there is a political instability that has caused some displacements from rural to urban, and that is why you can see an increase in our urban clients. And maybe this is a normal phenomenon that our average loan size has increased in the last periods. But we want to work on this. Of course, this is maybe in the years that follow. We will try to keep our loan size as low as we can as well, to serve the lower segments of the population. And I think that would be pretty much. Yeah.
Thanks very much. Yeah. Some other people from your team want to add anything or react to this, or are they confident with the presentation of their colleague? Fernando, they are very quiet, eh?
Yeah, of course, Fernando has explained well. We are ready for clients and investors' question.
Perfect. I would say clients. Can you just put on your video again? Then we see the clients. Here they are popping up in our room. All right, clients.
Yes.
Yes.
So I will represent the clients.
Can you raise your hand?
Yeah, sorry.
I don't. Okay, here. Okay, perfect. Yes, clients. We are very curious.
Was that good? So first of all, we would say that we are quite satisfied by the MFI, as we can see through the client retention rate that was reaching 89% in 2020 and 105% in 2021. Indeed, the interest rate that is suggested by the MFI is quite stable over the years and between 27% and 29%, so which is quite good comparing to other MFIs that are serving a higher interest rate. So I think that's why we are here. And also regarding the returns that we can get from our savings, it's quite honest, with around 6 to 7%. So most of us are taking group loans, and as we saw in the video. So the follow-up is quite interesting and well managed by the MFI. However, we struggled with the COVID and the economic and political situation in Ethiopia this year. As you can see, our default rate was higher than previously. So this is highly due to external events. We are trying our best to repay. Of course, it's not easy for us either. So yeah, that would explain why the PAR 30 is increasing over the years, and that is quite high this year. And maybe it was also more difficult to repay as our loans amount was higher, so we had to pay back larger amounts. So that wasn't easy. And so we were very affected by the economic situation. The tourism was very bad this year. There was also the political situation with the Tigray region that is disturbed, and we are quite there would we. Yeah, I think that we were quite. Sorry, I don't have the word, but yeah. So let's say that the situation didn't help us.
If I can jump in.
Yeah.
If I can jump in, Lina, I want to say the fact that Tigray was affected by that war. Other regions also are inclined to have worries that civil war can reach whole Ethiopia. So this didn't encourage people to do the activities with microfinance as they used to do.
Mm-hmm.
Yeah.
So maybe what we could suggest to the managers would be to help us to reschedule our loans more, so that we could have maybe a grace period to help us to face this hard economic situation. So that would be a nice gesture from the managers. And yes, that would be our main suggestion. So yeah, maybe my colleagues can can add some things if you have any other ideas.
Colleagues?
Not especially. All right.
That's perfect. Now it's a very nice analysis already, and I saw that people in the beginning started to applaud, and I think this applause can be done now too. Hand clapping. What is that word in English? Congratulations. How do you do that? You can, in the room, it's normally something. Now, congratulations, very well done. I think you have a lot of food for thought, and that will be used in the discussion later on. I think for the managers, do you have already some first reactions to your clients? Especially their request for the rescheduling and to have a longer grace period. How do you feel about that one?
Yes, I think that's a very good suggestion, because as you can see in our figures, we haven't done much rescheduling. So of course, that is something that we want to start working on.
We will show that one, then people know exactly where to find it. Eh? So on the performance indicators, this is here the information, a little bit higher. Here it is.
Yes.
And so until now, as you can see here, there is no rescheduling in the figures yet. Huh?
Yep. So it's something, of course, that we are thinking about doing for our clients, so we can give them more facilities. And I think it's not just our institution. In this lately year, we have seen in the industry that has been the main request. Try to be more flexible. Of course, we can do that for our current clients, but as Lina was saying, we can also try to come up with new products that include some grace periods, so our clients have more time to invest this money and make it grow in more interesting opportunities.
Okay. Some other reactions from the management team?
Yes, it's Christian. I have.
Hello, Christian.
Yeah, I have a reaction, but my reaction mainly it is among the managers' teams, because you know I really like to talk about the facts, and the fact, as the client says, they are defaulting, so it means that they are bad borrowers. So as being bad borrowers, I think we have to find a policy, probably maybe to reduce the number of clients, or to try to see if we can, as Fernanda said, to try to find a new product that we can offer to clients that can afford to repay, for repayment. Actually, that's the thing I would say. But it's mainly for the management team, not regarding the client, because they are bad borrowers. So we have to think about it, because if we keep on giving them loans like that, it's also a risk for a company. So we have to check really to whom we have to offer loans and to whom we will not give loans. Thank you.
Christian, you are the tough guy in the team, I hear. Huh?
Yes.
What's your function? You are the chief financial officer or what?
I was the finance manager of a company. So
I see. You come from the commercial sector. No, it's okay. Other people?
Yes, I would give some answers to Christian's concerns. What we have to do is first we have to align according to what the others in the industry are doing now. Due to with the competitions, what they are doing and what we can borrowers. I think we should send them a strong signal to give them credible incentive to repay, so that they don't have to I would say to rely on the fact that it's the pandemic and everybody are finding hard time to repay. So we also, they also, as our clients, they don't repay, but we should talk with them and really give them a strong incentive and credible incentive to repay back, while showing them possibility to design our products in such a way that they could benefit from grace periods and also from some reschedules in their loans.
Yeah, and so what do you have in mind as incentive? Apart from the redesign of the products, but do you have another incentive in mind?
Yes, maybe to reward those who will be on time by reducing to 0.5% their interest. We reduce that only for those who will be on time for the payment of their loans.
Okay. We will hear later on what the real Buusaa Gonofa is thinking about this idea. Huh? Thanks, Karin, for sharing this one to me. I think that it's, yeah, I'm just looking, is there somebody, no, not raising hands from the management team for an additional reaction to the clients? Is it somebody? If not, I'm just watching here, then I would like to go to the group of our investors. And that was also is a quite important group. If the investors also can turn on their videos and raise hands, then we know who are the investors. I see 3 now, only 3. There are more, I think. Yes, there they are, all sitting in the front row. That's, or nearly all sitting in the front row. And oh, okay, in the back too. Here they are. Hello, Abdullah. Yes. All right. Yes, you can keep this setting, and I would like to hear what the investors are doing. I've understood that we have a number of different investors. We have a social ones, we have a very commercial ones, and some with very deep pockets. Who will take the floor? Your microphone is muted. Yeah, now it's okay. Now it's perfect. Yeah.
Okay, so
yeah.
So I can start. So overall, when we look at the number, we were quite satisfied. We think that the organization is doing quite well for the past years, and of course, the COVID crisis has had an impact on the results. And so it's something that we could have expected, and we understand that it's because of external reasons. What I was saying, so yes, sir. Overall, we were quite happy, and as I am more a socially driven investor, I would say that it could be worrying for the organization for the savings that could cost more and more for them if they keep on increasing the saving products since they pay high interest rates on them. And so we would be ready to invest more money to help them in the future with this cost, and maybe some of my fellow investors can add something else.
Can you keep also your microphone a little bit closer to you? Then it's to speak a little bit louder.
Yes. Did you hear me?
Yeah, if you put your microphone a bit closer to your mouth.
Yeah, I mean, it's integrated to my helmet, so
okay. No, that's okay. That's okay. It is understandable, but yeah, you can continue. Sorry for the interruption.
No. So yes, on my behalf, I'm more socially driven investor, so I would invest more money because we're expected for the organization to adapt, let's say, from the COVID crisis. And yes, also something that I forgot to say is that we noticed that for the past few years, the write-off ratio was at 0%.
Okay,
So
I
we
will
thought
go
that
to
this-
that slide to show it.
Yes.
Yeah, here we are. So there is
Exactly.
there are no
So-
write-offs for the last years. Yeah.
Yes, so in 2019, we don't see any explanation. For 2020 and 2021, we guess that maybe it's related to the COVID crisis, that you get more time to your clients to pay back the loans, but we would like to also have an explanation on this or to know why actually the write-off ratio is at 0%.
Indeed, very good question, Chloe. Thanks for that. I'm quite curious. You are an investor, social one that you explained, and if you are interested in what kind of investment? Do you want to? What kind of investment do you have in mind for this organization?
Yes, equity.
You would like to invest in the equity of this organization. Okay, and what is attracting you for doing that?
Sorry about that. So actually, I'm here. So I don't know if you see Yasmin. So let's say that we're
Okay,
duo
Yasmin.
of investor.
The floor is yours.
Yes.
Sorry for that, but we would like to invest in equity because, as we said, like we saw that it was not a strong trend, but still a trend of increasing savings, which are expensive source of funding. So because we are in a very difficult period, we would like to invest in equity to provide them a cheaper source of funding, since we are social investors. And yes, that's the main reason. What can I say? Yeah, maybe our colleagues have other explanations, maybe more commercial ones, or yes.
Okay. Thank you very much. We will, Yasmin, we will go to your colleagues to hear what they say.
I am Sylvia. I would like to
Hello,
add maybe from a little more stricter point of view. So coming back to the Part 30.
Yes.
We were discussing that it was indeed quite concerning, though the Part 30 in 2019 was still absolutely acceptable. But comparing with the very steep drop in the risk coverage ratio in the same year, it does show something happened already in 2019. And we are very happy to further invest in the MFI. But we would like to see what is the policy to improve the quality of the portfolio, because we think that would be very important, coupled with how to again increase the lending. How do they? What is the expectation? How can they again boost the lending after this crisis? So that the balance between the lending and the savings is maintained. And yes, we think that for the next couple of years, it is better to provide equity funding in order to stabilize the situation. Yeah, I think that was from me.
Okay, clear question.
I'm Herman.
Yes, Herman.
Yes, I think we will go more for the equity funding because the more the MFI borrows money from external sources, they have to pay interest rates which are not which is going to make giving out the funds expensive, because you can discover that borrowings made increase from the beginning. We had more of equity at the beginning, but towards the end, the level, when you go to the funding structure, discover the borrowings increased. Yeah, by 10. So I think
I can show it here. The borrowings increased. I will just show it here. When you talk about the borrowings increased, you are looking mainly to the real figures, I think.
Yes.
And this percentage-wise, it's about around 40% on average, but when you're referring to the increase, you are mainly looking to this figure, I suppose. Just show it to everybody. So you talk mainly about what line is this, the borrowings here?
No, I was talking like from the percentage you discovered that the borrowing increased from 29% to 39% at the end of the yeah.
You started here indeed, yes,
Yeah.
but last 5 years, okay, yeah, okay, perfect.
So that makes it.
And what's your position, Herman? You are also interested for
the equity. We're going to increase the equity.
You go also for equity investment.
Yes.
And what is attracting you most for equity investment?
Because we noticed that the more the more the MFI borrows from external sources, they'll have to charge. They might need to increase interest rate in order to meet up, since they're already facing a crisis. But they will be stepping like investors to increase the equity that might maintain the interest rate at a lower level, which might permit them to be able to meet up more broader number of customers.
Mm-hmm. Okay, so also equity investor. I haven't asked that from your side, Sylvia, but you are also equity investor?
Yes, I would say equity.
You would also be at equity. Is there also other investors having another opinion?
Yes.
Who? Yes, here in front. Yeah.
But, a comment that I want to say is
A little bit louder, please. A little bit louder, please.
The comment I want to add on this about the operation self-sufficiency.
Okay.
See, for the last 3 years, it reduced.
Okay, I will show it here. The operational self-sufficiency, yes. It reduced, yeah.
Yes, and if you can see, the run disbursed were increased, but the net income reduced. Okay, we can say that it's because of the crisis, but we don't have any prediction that things will go well. Comparing the portfolio at risk and the write-off from 3 other previous years. So I can go for the equity, but on condition. Condition that they assure us that some measures they took for the company to grow. Because if they continue on this way, the microfinance will lose the capacity to keep on the work, as they have said that they changed their customer focus from the rural to urban area because of the wars and war things like political things.
Yeah.
So we must be assured that it will not affect their loan portfolio and the management also, and see if they go into the urban area, maybe they can think about including also individual borrowers.
So that's new. So big from that's your, as an equity investor, you would like to see, so not only growth, but also the possibility to go into urban areas with individual lending, not to stick to group loans.
Yes, because they have reduced the agricultural loans that they were giving to people. It reduced by 10, if I saw right.
Okay, I don't know if everybody has seen that one. I will just show it also on the screen. So this is also information that is available in the fact sheet. These are the percentages on the sectors of investment. And here, so we have 4 classes: agriculture, production, services, and consumption. And indeed, what you are referring to, Yvette, is like agricultural is going down by 10% in favor of mainly production, and also 4% recent increase, but it's the same level as the years before for consumption. But indeed, agriculture is going down. So that's your deduction that it might be a shift to more urban clients.
Yes.
Yeah.
That was my point. Thank you.
No, okay, thanks very much. It's a very clear point. I'm just watching. Are there still other people from the investors side? I'm just looking because everybody is looking for equity. There are no debt investors, people who want to provide loans to this organization. It looks like everybody is heading for this one. I'm looking now to the management team, the reaction to this group. What about questions of extending the grace period to have here the real social investors on your side? Reducing the interest rates for those who pay on time. That was already from the client side. But also the question I had about no write-offs. What about that one? Yes.
I think I also have a, it's Herman. I think I also have a question before they start answering.
Okay, Herman.
Yes. They talk about rescheduling the loans at one point. So I would like to ask, what is the point about rescheduling the loan? Are you sure that if you are the customer, are you sure if the clients are not bad customers, or is it just the economic situation? Because it might be that the customers will not pay at the end. So what is the point of, what measures have they taken to make sure that if they reschedule the loans, the customers will repay, and not just that they are bad customers? Because they should not just based on the economic situation, the COVID, and the political crisis. So that is what I would like the managers to explain.
Okay, managers, the questions are clear, I think. And what are the answers? Let's start perhaps by the write-offs. Why no write-offs?
Maybe we can say here that, as one of our investors was explaining, it's because we are still expecting to recover these resources from our clients, because we understand that this year has been an extraordinary situation. So we're really thinking about doing that. And yes, it's true. It's not. We haven't written off loans from past years as well, other than the last one. So because mainly we were taking into account all the costs we have incurred for this for trying to recover all these loans. So we didn't want just to assume the loss, and we were hoping to start our rescheduling program or incentives program in order to see in real terms how much we can get back from our clients. And then once we are completely sure that it's something related to their ability of payment, then we can start writing off.
And to the question of Yvette, talking about the growth that you are, is it correct observation that you are reducing agricultural loans in favor of more loans to urban clients, and being active in the sector, more production loans instead of agricultural loans? Is this the trend? And do you feel about going into individual lending in the future? Because if you are going for that plan, it seems that equity from Yvette is in the pocket.
Yes, of course. We are, first of all, I think we are happy that our investors want to make part of our company, because they are going more for the equity investment. So it means that they have a lot of expectations on our MFI, but that we can keep growing in the future. So that makes us very, very happy, because of course in times of crisis, equity is even riskier than usually other type of investors would say. I would go for the loan because that gives me a steady return on my investment. But if our investors wants to take part of our company, so that makes us very happy. And Yes, of course, we are trying to, we are thinking about creating these new products so we can, I wouldn't say to move completely to individual lending, but maybe we can do it gradually because we don't want to change our business model so fast or so quickly. We want to give our clients some time to adapt. So we are thinking on doing that. And the agricultural part, yes, it's true. We have been moving more to productive loans in urban areas, as I think we were saying at the beginning of our presentation. There was also maybe a displacement phenomenon that we were facing, people coming from rural to urban areas. So maybe it's not that we don't want to give them loans, it's because they just been coming to urban areas, so we keep serving them. That's why maybe we see the reduction in our rural loans.
Okay, I noticed also the questions from Herman regarding the rescheduling. Somebody of the management team who would like to react on that one. If I've well understood, Herman, it's like rescheduling, be careful because it might give a wrong sign. Is that what you were saying?
Yeah, because there is if actually rescheduling is the solution, or if among the borrowers, have they checked if the borrowers are actually bad borrowers, or the problem is actually the economic crisis? Because there is, yeah.
So you are saying to make sure that if I've well understood, I translate a little bit, rescheduling, yes, but only rescheduled for clients that are not bad borrowers, but those who are hit by the specific crisis. So it's an exceptional rescheduling. Is that what you are saying?
Yes, because I'm trying to be prudent here, so we don't just schedule be counting on debts that are already bad, hoping that they will repay when they might not come back. Because when you look at the retention rate in 2020, it dropped, even though in 2021 it started increasing. So that's why I want to know if actually rescheduling is the right solution, because some customers might actually be bad customers.
Okay.
Yes, for that one, maybe I will answer Herman that our loan officers are doing the work. We send them in the field to look at each situation, the situation of each of our clients, in order to sort out which clients are experiencing problems because of the pandemic, and which are only voluntarily bad borrowers. So our loan officers are doing that work. And as soon as we have the report of our loan officers, then we will know the percentage of real bad borrowers because of the
Karin, the sound is now. I can. Karin?
Let me finish what Karin was trying to say.
Yes, thank you, Emmanuel.
I think she has a problem with the network. Of course, we have our loan officers on field. We can integrate that like our corporate social responsibility as well. We gather these data to find out who are exactly the customers that are affected by the COVID-19 situation, the pandemic. And when we gather all these data, we integrate it from there. We can be able to do the loan rescheduling on an individual basis, not on a group basis. It means not all our clients will be able to get these advantages. We'll select some clients based on the data gathered from field from our loan recovery officers, and we'll actually set up some sort of psychological team, which is going to be help as our corporate social responsibility as well, to help those people who are affected, and we'll discuss with them on one-on-one basis to actually know exactly what is your point, and from there we can come out with a tentative information on a loan rescheduling.
Okay, thanks, Emmanuel, for this extra explanation. Sorry, Karin, that your connection was a little bit weak, but we have understood the message. So very well. So I think that yes, please. Somebody?
Yes, I want
okay,
to.
I see a hand. Yeah, I see a hand raised.
Yeah. Okay.
Yeah.
Can I continue?
Sure.
I'm just sorry. I'm looking. Yes, you can continue. Yeah, and also I'm just looking, and then to. So it's good luck speaking now.
Mulualem.
Okay. Okay.
Mulualem, the manager group. Yeah.
All right. Yes.
Yeah, I wanted to give a react on Yvette suggestion on regarding to operation self-sufficiency decreasing over the year. Of course, over the year, the OSS is decreasing, but we are working what we done at a maximum level, as you see from the graph.
Okay, I will just show the graph. So here we are. Yeah, here.
Yeah, as you see here, the operating self-sufficiency is over the year decrease actually, but our operating expense ratio is decreasing from. Can you down the graph? Yeah, yeah. Our operating expense ratio is decreasing from 19.4 to 14.7. So we are using our maximum effort to decrease this. We're proud of this one. And still we are also working on searching a source of fund which has low cost. The good thing is we are here a good news from our investors. They are
all equity investors
to invest on investors. So I hope we will have a good operation self-sufficiency for the next year. So don't be fair that our company OSS will not be below 100%. I am sure that.
Okay, thanks, Mulualem. I would like to go to good luck.
Yes, I'm from the investors side, and I just wanted to ask a question. What is the management doing, or how are they prepared to deal with bigger issues such as currency? Because when you look at the fluctuation in terms of currency variation, it's very, very high.
Okay, I will show this also because then people know where to find it. So here we are. So the fluctuation compared to the dollar and the year one to the euro. So you see the fluctuations indeed. Okay.
Exactly. So what are the management working? How are they managing that?
Yes, it's true. It's true. Thank you very much for pointing out this. And we are designing strategies to go to the to hedge this kind of problem with the currency. We're planning on getting these financial derivatives such as futures or options in case. To protect against currency risk. So yeah, it's something we really are thinking about taking into account, which would be right like that, like getting a coverage for these situations.
All right. I'm just looking at some. Wait. I see some other hands raised by Armande.
Just if I may just add something regarding the that currency issue. In our borrowing, we only privilege the borrowing coming with the foreign currency.
In local currency, you mean?
Local currency,
yeah.
Yes. Local currency.
All right. A question from Armande?
An investor.
Yeah.
I want to know
a little bit louder, please.
I I want to know how they do to keep the efficiency of the group. You know that we they are working with group lending.
Yes.
And Fernando says that to justify the increasing of their loan size, Fernando said that it's because some people move from rural to urban area, and if it's what happened, so we know that in the group there was some member who the group was broken because changed their place. So how they did to keep the efficiency of the group, and we know that in urban area it's difficult to form a group lending. So how they do to keep the group lending in their activity, and Fernando refused to do the lending, the individual lending. Not he didn't refuse, but he said that it will be done progressively. So the group lending is more efficiency in rural area than in urban. It's my
No, it's a good. So I think your observation is as follows. We have the situation in the rural areas with a lot of group lending. If we now shift to individual lending, that's already one difference. And if we change from from rural to urban, how the cohesion in the group lending, because that is perhaps lost, can this have also an effect on your efficiency? So how to keep up the efficiency when you have less group lending? How can you keep the efficiency as high as today in your organization? Is that the right translation, Armande?
Yeah, and I'm not convinced with the reason he said to justify the increasing of their loan size.
Okay. On top of that, you don't agree. Yeah, the reason what you are saying for the increase of the loan size, Mandy doesn't agree with that one. Fernando?
Yes. Okay. First, about the group lending and this lending methodology, we wanted to say that, of course, we are thinking about this maybe loss of efficiency when we move to urban areas, because this lending technology works much better, group lending in the rural areas. But we have to consider as well that in this time at this stage of life, technologies are widely spread, or are getting the penetration of smartphones and all this technology. We are expecting to invest in more digital solutions in the future, so we can try to keep our balance between our personal but also with the technology, so we can apply kind of a similar system in urban areas. And that's why we are with our healthy financial situation, we are expecting to get more funding. And if you can see the graph, we have a lot of room for voluntary savings, so we want to really get more voluntary savings products in the future. So that would be the one explanation. And the one that was about the average loan size, yes, as I was saying at the beginning, maybe I haven't convinced Armand yet, but it's mostly about
the practice will show it in the future. I think that it's really possible.
Yeah.
Is it?
Yeah, I think so. Yeah.
No, I'm also watching the time, and I think we really managed to go through a number of indicators to look from the organization from different angles. But before I give the floor for the real life of Buusaa Gonofa, to see how Buusaa has reacted, if all your observations were correct, before I give the floor to Mr. Teshome, I would like to congratulate all of you for the good work, for the good observations, also for this debating style. So from my side, thank you very much. Mr. Teshome, the floor is yours. And now I hope that the connection is correct. Mr. Dayesso?
Yeah, thank
hello.
you.
Hello. Yes. Was it possible for you was the connection strong enough to hear everything?
Yeah. Almost, I heard most of the things, definitely, yes.
Mm-hmm. Yes. Teshome, before we start with the discussion about the different observations, and so we have seen in the beginning of our session already some activities of your savings in the city, and I think this was filmed in Dar es Salaam. Is that correct? Sorry, in
Asala. In a place called Asala outside of Addis.
No. My excuses. I'm completely wrong. No. Sorry. I'm looking now for the name of the city, of the head city, the capital of.
Asala. It is Asala.
Okay, that was the place. And can you give a little bit more background of Buusaa Gonofa, because until now they only have seen the figures, but they don't know the history in short of the organization. I think that might be interesting to start with, and then we go to the figures and the observations of these students.
Yeah, okay, thank you. First, welcome, and it's nice to meet you guys. I'm Teshome. I'm one of the co-founders of Buusaa Gonofa. It is coming from a local NGO called Hunde. It was established in 1999. So it's almost already 20 years in this business. I myself learned about finance from Buusaa, and I don't have really a business background. The organization was previously working with an NGO called Hunde, which is a local NGO. And in 1996, a new law came in Ethiopia, and that new law required all NGO-operated credit and saving operations to get licensed from the central bank, or they should be closed. So here
Mr.
came
Dayesso, can I just
yes?
a small question? Is it possible for you to turn on, unless it's for the connection difficult, to turn on your video? Then I will put you on the screen.
Oh, sorry, I didn't know even.
No problem. Sorry. But then I will.
Yeah. So it is. We took over. I'm working at that NGO as a finance officer. It is by virtue of the thinking that being a finance officer of our NGO was considered to be an expertise at that time. So I became the CEO of the new Microfinance, which was licensed by the central bank. So I think it is established as a share company. That is how the Ethiopian law defines microfinance. We got the initial paid-up capital from donors. In fact, it was one of Belgium-based donors that provided us the initial capital, and also some individuals, including myself, contributed some small money. About 90% of the paid-up capital came from the local NGO, and 10% we contributed, and that organization was licensed almost like a non-bank financial institution. So it is regulated and supervised by the central bank, just like any bank and insurance companies. We started the operation almost in 2000. And by that time, we have to take over from the operations of the NGO credit project. So one of my job was really to make some change in terms of the financial discipline, in terms of credit discipline, and in terms of also pricing. Before that, really, a major portion of the loan of the NGO was not repaid, for which I myself were also responsible equally. And again, another important context is, the NGO that founded Buusaa Gonofa also has a bit unique background. JAS NGO itself was started in, before Buusaa's establishment, it was started in 1996. And it was founded again by people who had some previous experience in the previous regime, were political prisoners. I myself, I were during the military regime. I mean, people usually remember it as a communist regime. Some of you might not have been either born or you might be very young by that time, I guess. So I myself have been in prison during the military regime for about 8 years. By that time, when I was really coming to the NGO and even starting Buusaa Gonofa as a microfinance institution, I myself have passed 1/3 of my life almost in prison by that time. So now, of course, since then it's quite a long time. So how is that's really, so one of the key important things I'd like to specify is we established really this institution for social purpose, not for a commercial purpose. That has influenced our value system. Definitely it has influenced also our culture and the type of focus that we have to really have was primarily social instead of commercial. Yeah. And finally, just on the background, it has never paid any dividend. I think most of the MFIs in Ethiopia, especially the first generation MFIs, I would call, most of them is the Ethiopian microfinance sector is dominated by, now currently there are 3 types of players, but 5 years ago or 10 years ago, or even by the 1990s, early 2000, the dominant when MFIs transformed from NGO to licensed MFIs, the sector was dominated either by government-supported MFIs, where the government was really the major capital provider. Ethiopia is a federal state and there are regional governments. So one of the major players in the industry, even today, is the regional government-owned MFIs. The second group of MFIs are organizations that are coming from NGOs, just like Buusaa Gonofa. So that's really the dominant type of the microfinance industry in Ethiopia. Now, since 2015, new generation of MFIs are coming up. Recently, since I think in recent times, over the last 5-10 years, less than 10 years, the government also made entry into the banking industry a little bit stringent by raising the minimum paid up capital to be formed as a bank, quite significant. It's about 500,000 local currency Ethiopian birr. So that made entry into banking a bit difficult. And there are MFIs that are joining through the microfinance because the capital requirement for microfinance is quite small. It's almost less than 10 million birr. It's 10 million, which is, when you compare it to 500,000, I don't know, it's very difficult for me to translate it to euro to give you a context, but you can probably assume €1 is $1 around 30 birr. So generally, that has made now the microfinance, there are really serious commercially, purely commercially oriented MFIs that have came up recently, and today we have about 40 licensed MFIs. Out of the 40, some 5 of them are the new generation, or some 7 of them are new generation, while the rest 35 of them are the old generation coming from either government or from NGOs. So I think that's the general background and context about Buusaa Gonofa. Coming to the session and the discussion points, I think I'm impressed. I'm very happy, and I also learned from some of the issues that you raised. I never even thought about those issues myself previously, or I've never looked at them that way. Generally, I think I'm really very satisfied. I'm very impressed, and in some cases, I am even surprised by your observation to really see and identify some of those key issues. So generally, I think in many of your assessments, I fully agree. But what I'll try to do is really, I'll try to bring it down your interpretation to my context. So some of the areas you clearly picked up, the students were really their observations, the observation of be it as a client, as managers, or as investors. It was, for me, it was quite interesting and I'm fascinated. And I realized also if you have known some of those contexts, you could have even elaborated far much better. And the second observation I make is, okay, Ethiopia still has some unique contexts. One of the contexts in terms of investment environment, you know, foreign investment in the financial sector is still not allowed. So you can't be equity investor, for example. Secondly, the Ethiopian financial market also is quite still not matured. So, for example, the issues of hedging, or I don't even know what hedging is, but when I guess from your discussion, the issue of, you know, some debt in other financial instruments or financial derivatives or etc., those type of situations are not relevant because it doesn't exist. Those type of instruments and markets don't exist in Ethiopia. I think this is really about the context and just what I would like to bring in. The third observation is, yes, Ethiopia has some political difficulty, and I would take this political difficulty to started from almost 2015-16, when there was political protests. Then there was some change in the guards at the top recently over the last 2 years. Now, currently, we have definitely there is political conflict or even war in some northmost part of the country. In terms of microfinance, 2015-16 to 2019-20 was really a tough political environment for my operation particularly. When you take the current political unrest on the north, it's just, I'm sorry to use that word, but because we are some of my colleagues and our friends, but also the farmers especially, are definitely being affected by that situation. But I would say the situation in the north part of the country looks like as if it does not exist in the context where I'm operating. So it's really a geographical difference that has to be taken into account in that sense. So what it means is that political difficulty, at least for the microfinance environment and for the business of my customers, it's not really relevant. It's very far away, probably in the range of more than 500 kilometers. So that's why I said it's as if it does not exist, I would rather say. It doesn't mean that that conflict and that problem is not Ethiopian problem, it's our problem, no doubt about it. But when you look at the grassroots operation and business environment, it's very far away, so it's not really very much relevant. Having said that, when I look at some of the key points and questions and debates that were raised, I may not be really exhaustive. We can probably raise in the form of also question. Generally, as you have correctly observed, one, the pandemic definitely has affected Ethiopia and my clients as well, and my operation itself. But even the pandemic itself, when you look at generally sub-Saharan Africa and in Ethiopia, okay, the health effect was not as we feared. There are people are dying, people are affected. And even my family, my wife at this time is even sick. I'm sorry for that, but generally when you look in terms of really the health costs that you were facing in terms of deaths or if there is high hospitalization, it didn't really significantly affect as much as we feared, but the economic damage was done. And fortunately, even our government, they never closed. There was no lockdown. It was really only social distancing measures and some hygienic practices that the government was promoting. They never made any close down, like it has happened in many other African countries. If you go to Sudan or Kenya or Uganda, many businesses and livelihood was disrupted completely or closed. Here, there was no such type of measures, but the economic activity has been definitely affected. And starting from April, we have faced clearly a loan repayment crisis. And we even stopped loan disbursements between April to September. And it's only on October and November that we restarted our operations to bring it back to normal. So that has clearly translated on the loan repayment. But again, there I have a caveat. What I would like to emphasize is, even then, this was purely urban. That's also another dichotomy. In the rural case one, the loan was already, most of the loan was dispersed by May, June. And we never wanted also to stop loan disbursement for the rural, even after the pandemic hit. And because some of the farmers, rely on our loan to purchase agricultural inputs. So we made a clear decision. We will not stop loan disbursement for the rural group, whatever costs we are going to face, regardless of. So measures. So that, and secondly, because of nature also, a loan disbursed around April, May, June. Harvest time comes around December, January, February. So there was also that consideration, and because of that, the rural segment loan disbursement was not affected, but urban, it was seriously damaged and affected. And loan repayment for 4 months, we can't get, our clients. We're trying to visit them or to contact them, but it was very difficult. There was no public transport, movements were stopped, even marketplaces, because of fear, but also because of government policy to keep social distance. Transport capacity was reduced by half. The transport price was doubled. Marketplaces in rural areas were split into 2-3 different areas so that there is no crowding. So these factors have definitely disrupted the livelihood of my clients, many of them, and service industry specifically, trading activities highly.
Is the sound?
Hello?
Yes, it was just interrupted for a few seconds.
Yeah. As you have correctly observed, the market and the loan repayment was absolutely affected, and we were actually preparing ourselves even for a significant loss. But I'm actually surprised when I think back, the urban segment was recovered, and it was really now functioning almost at full capacity, I would say. But you can see the PAR started just April 1st. I remember it was March 31st, actually. And starting from March 31st, 2020, PAR was shooting up. And in some cases, I remember on March 31st, there was no movement of public transport because of some local authorities and regional states took some measures. In some areas, my staff already went to the field early in the morning around 7 a.m. and they were there at the group meeting place. Then they have to return back to office from collection at 9 in the morning, at certain time, I mean. And before they they collected the money, but they can't get transport to come back to office from the group, from the village, because of the sudden stoppage of public transport. So you can imagine what that means. So generally what it means is, I think that effect has lasted, but also subsequently, okay, that was some lack of coordination, but eventually, you know, the government has took some measures to enhance and to encourage people to practice social distancing. Now, but in May, from April, May, June, July, and August, and September, repayment was either stopped or very, very difficult to get loan repayment from urban groups. For rural groups, there was no effect. And obviously, we were also expecting our larger portion of the loan. Normally, if we give input loan or even general purpose loan for rural groups, about 90% of the repayment for rural groups will come starting from December. That is the harvest time in Ethiopia. So generally, what you have observed is the upshot in PAR is exactly because of the COVID. There was some political incident around June, July, early July for about 1 month. Some businesses were burned in some areas. That has rather affected our operation and our clients. Some of our clients, their business was damaged. So that's why I said the political conflicts now, the recent one, which is in the northern Tigray region, is really far away for those localities, but that type of political incident has affected some of our branch and for the businesses. In terms of risk coverage and etc., I think that's also a very good observation. If you have seen the general, our risk coverage ratio and our also provisioning expense ratio has been increasing since 2015-16, which is not available on your data for some of which, but when you look at 2017 or 18, there was the backlog effect of those situation. In 2015-16, there was a serious drought in Ethiopia, which was an El Nino-induced drought, and that has been really a disaster for our portfolio. And some of the measures and portfolio diversification strategies we later on adopted was also a result of that. And that is what you have observed, you know, the discussion you had, very interesting discussion about urban-rural area. Before that, something like 70% of our loan portfolios are almost rural, and rural means essentially it is agriculture, or mainly the main income source is agriculture, even if they have some trading activities. So that experience has forced us really to revisit our portfolio strategy, and the urban trend that you have seen is partly a counter reaction to the drought experience and the loss we sustained in 2015-16 droughts. But again, from that what you see is the provisioning expense ratio has been increasing. Productivity, operating efficiency ratio has either stagnated or it was deteriorating. Actually, I would rather argue the operating efficiency ratio of around 14-15 you have seen on the fact sheet is hidden, but I know my operating efficiency ratio has been deteriorating almost since 2018. There was some growth in loan portfolio, and there is also, as you have seen, a clear, strong increase in average loan size. And the average loan size, dispersed loan size, is a trend that has been adopted because of those challenges with the rural portfolio and the agricultural production risks and uncertainty. And so, and most of this growth in the average loan size is purely for urban clients. And two factors are there. one, we have increased already, even we know from other data, normally we track, we segment our clients not only by urban, rural, but also by their poverty profile. We have got some internally developed tools that we use just for profiling the poverty status of our clients. And when you look at just for urban and rural, I clearly know the average loan size for rural is almost half of the urban one, or 1/3 of the urban one. This one is average. This one is average. It is for all. But when I segment it for urban and rural, the urban loan size is already very high. It is in the range of about 22,000 birr. Here it says 13, for example. And in 2020, it was already 20,000 birr for urban. For rural, it's around 6,000 to 8,000 birr. So it's nearly more than half of the urban. And that has been the second factor. There is when you look at yield and the profitability of the two portfolios. The urban loan is more profitable. It has high yield, although we charge more or less similar interest rates. Their repayment trend is completely different. The urban clients pay very regularly and almost either weekly, 2 weekly, or every month they will pay both principal and interest. When you look at the rural groups, almost all of their loan comes like a balloon loan. It's just agriculture loan, I would say. So that also makes the yield very low for the rural segment. But for the urban, they pay frequently. For both, we charge flat interest rates. Urban, the rural one, they are charged 24%, but the urban, it is 18%. When you look at the yield, the urban is more profitable. Also, in terms of the risk, it is low risk, except that, as I said, because of the pandemic-related variables. So, secondly, you are right. In terms of productivity, our productivity is relatively okay. But when you look at growth in outreach, there is a reasonable growth in portfolio. But when you look at growth in number of outreach, since 2016, it was almost stagnant. And I think that's also what the industry in Ethiopia data tells you. This is partly related rather with the political environment in general. There is also a large increase there was a political, the unrest and the protest in 2015, 16, 17, 18, which changed some of the political leadership. There is also economic uncertainty because of those political change and etc. But also there is high inflationary trend in the economy. So the general growth trend in terms of outreach was almost stagnant, literally. But the loan portfolio has grown quite small, not really. In the previous, until 2015, we have been growing almost at a rate of 20% every year, both client and outstanding loan, outreach and outstanding loan. But when we check growth in recent later on years, it's less than 10%, sometimes negative, as you can see, for example, in this year as well. So I think that's, and in that sense, the productivity, the higher productivity, okay, when you look at it in terms of growth or cost saving or operating efficiency, now I'm not happy. No, it's not really a good trend. That's not a good trend of growth and productivity and efficiency. With portfolio growth, normally you should expect a growth also in operating efficiency ratio and a better saving of costs, but that's not the reality in Buusaa. In terms of cost of fund and deposits, yeah, I think what you have seen already, you have noticed, and some of you have already mentioned, there is a growth in deposit. It's not really, okay, it has finally translated in increased interest rates, but rather what happened is, okay, that's a good explanation from the figures that you can see. But behind that, what has driven that is, we have been pushing to increase particularly the share of voluntary saving. Over the last 3 years, you can clearly see that. And normally the voluntary saving will be paid a better interest rate compared to compulsory saving. The portion of voluntary saving is lower. Totally, we cover about 40% of deposits. 40% of our loan is financed by saving, roughly, over the last 3-4 years. And there was really a good improvement in deposit mobilization, specifically voluntary saving. And because the interest paid on that is relatively better than what is paid on compulsory loan-tied saving, I think the argument about better interest rate is sensible. It's quite logical. But what has driven that is really the improvement, the focus on voluntary saving mobilization. And yeah, are we going to abandon urban and moving rural and going to urban? God knows. I think that's exactly the type of dilemma that is going to remain probably in the double bottom line type of organizations like Buusaa. Whenever you have two objectives for commercial entities, purely commercial like banks, the rule is very easy, simple. Go for profit. So ignore rural, go for urban. That's what I said earlier. All MFIs that were established recently with private capital for return, all of them are not only urban, all of them operate only in Addis. Addis Ababa is the capital city of Ethiopia, which is really the largest city. All MFIs are operating there because of clearly the profitability objective. Rural, it is expensive, it's laborious, it's also high risk, just from a financial point of view. So what we are trying to do is, previously we were diversifying to consumption loan by giving, consumer loan for salaried employees. We are not really happy with that, and we don't. It turned out to be really purposeless in terms of the purpose of the mission of the organization. Now, what we are doing is two-track. When we move urban, on the rural, because of no growth in total customers in general or in outreach over the recent years, we didn't really leave out our rural customers. No. We continue to work with them, but we introduced a new product, especially SME loan, with clearly individual loan. And secondly, even for our group-based urban clients, which are low-income informal sector operators and micro enterprise operators, we have really liberalized and released our loan size, and they can go up to 200,000 even within a group loan. Previously, it was maximum to 50,000. But no, 5 years ago, it was up to 20,000 maximum for urban. Rural, they can go only to 6,000 with group. You can even see the difference between urban and rural. For rural, maximum loan size in group is 6,000 birr. For urban, 20,000 birr, almost 4 times or more than 3 times. So I think the logic is simply in urban areas, there is more profitable economic opportunities than in rural area. Rural area is dominantly agriculture and the economy is rigid. So that's the only reason. Otherwise, interestingly, all of them were starting at the same loan size with 500 birr, And the urban will progress and they will take a loan twice a year, whereas in urban rural areas, people take loan only once a year. In urban areas, however, most of the clients were taking a loan twice a year, every 6 months, otherwise 8 months, every 8 months. So the growth in loan size, therefore, in the portfolio, most was coming from urban, some small percentage increase in clients, but most of them were because of a new individual loan. Individual loan definitely has got its own issue, as you have already raised. Now, turning from the client side, hello?
I still hear you, but now it's interrupted.
Huh?
Now it's okay. It's okay. I will show it that it's okay. Wait, I take the. It's okay. Teshome, do you hear me?
I know this sound because I experience it.
Yes, what's the sound?
This kind of sound was coming regularly. Okay, we lost the connection.
I suppose he will rejoin. But they also had an electricity. It was interrupted electricity, so he's using his cell phone, the battery of his cell phone. So I hope it's not empty because he cannot recharge for the moment. Let's give it a little bit time to reconnect.
Mualem, maybe you take over.
I have a question, actually, maybe to Professor Kurt or to the investors. I was thinking about the policy of not paying out dividends.
Yeah, I think that's a good question that will certainly come back when Mr. Dayesso will rejoin, because he has a clear view on that. Why not paying out dividends? I know, of course, it's the main shareholder in their organization is, of course, a foundation. It's a foundation that actually said, look, we want to invest to start this organization, and instead of paying out dividends, we just reinvest this in the growth of the organization. That was that vision. But I know that that the discussion is going on in the organization, so it's a good question to ask to Mr. Teshome Dayesso.
Thank you.
Well, I'll check on my cell phone if he has left a message. Because I can also try to get him in the meeting via his cell phone.
I don't think that will work, Kurt.
Nee, GSM zal dat niet gaan.
In Skype that works, but it doesn't
dial
work.
a number, you have also this option here.
Yeah, but I think it's you can try, but
you know, it's the only thing I can do for the moment instead of wait, and I can also wait. Okay, let's try. We couldn't find any matches, so that's not working indeed.
No, it's not connected yet. That's why we still need to. Is there?
All right, now you are sitting next to me. Huh? That's better. Now it will work more easy.
Okay.
Okay, now we lost the connection, but here you are again. Oof. Okay, you can continue.
Okay, so in terms of, I think, clients, some of the issues raised, most observation, I fully agree. I think already I have addressed the issue of default and the retention. Just okay? Can you hear me?
Yeah, perfect. Thank you.
Yes.
Okay. The larger loan size, I fully agree. Definitely some clients have faced loan repayment problem, as I have said. But one of the things I think that I'd like to give you again as a background information that the figures don't tell you is the average loan size for the urban clients is almost, the average loan term for the urban clients in general is around 8 months. Now, because of that factor, okay, even loan rescheduling, we conducted some assessments in almost June and July. Then in September, especially in some larger towns where business was highly disrupted, loan rescheduling was not relevant for the client. It was not an interesting incentive. One, some of them already have paid more than probably 20%, 50% or 3/4 of them, to extend that loan, instead of extending, refilling their liquidity by taking new loan was one of the most important incentives that clients were asking. We were very open, and even the government provided some facility for MFIs as well as banks to allow them to reschedule loans. But we couldn't even use that facility, and we borrowed that money. Most of the clients wanted to urgently renew their loan, take a new loan, and really proceed. So what we did was, for some of the clients, especially on certain towns, in the larger towns, we have to really increase the loan size beyond what the policy, the existing policy allowed. So loan rescheduling was really irrelevant. So it's definitely a logical argument. Okay, what you pay gives them some interest rebate or interest reduction. That was not as important as, again, the loan size. How much additional loan are they going to get today, so that they can refill, their stocks. Some of them have probably consumed even from their capital, because their business and their household consumption are not really that much seriously separate businesses. It is not a separate business. That's what makes it livelihood. So because of that, you're really very eager to take bigger and new loan by closing the previous loan. So secondly, we have to look at also their debt capacity and their repayment capacity. Rather, because of that fact, in some of the situation, what we decided was, for example, there was some unrest in Oromia region, we call it, in July, the first week of July, because of some local political situation. There was a singer that was assassinated, probably because of that. There was some conflict, so community level conflict. Many businesses were burned because of that. And for those clients, what we did is, really we didn't write off the loan. We have to give them a special grant for those clients whose business was closed. So it was clearly they never repay it. so that they can really immediately use in whatever. It's not significant amount. It's for about 15 customers in one town, and in others only 3 people. We have to give them really something up to, I don't remember, some in Ethiopia we call it around 20,000, depending upon their business and their previous situation. Some of these clients have stayed with us for about 15 or 20 years, and many of these also they lost their shops. They lost their some of those shops or even houses were built by our loan, I would say. So for those people, we have to give them specifically a cash grant, and it never affects our credibility and our business. It's really a kind of solidarity that we have to do it, and I'm glad I was able also to convince my board, and that's how they coped. So I think loan rescheduling for 6 months loan, 8 months loan, even for 12 months loan, it may not be that much interesting. But if it has been 2 years loan and a larger amount, definitely that's an issue that has to be seriously considered, and we were ready to consider that. So I think that's one issue. Yeah, another interesting question that was raised is a very good question and excellent observation. There was no write-off in 2021. Yeah, I think it's also related with both accounting, but also the regulatory agencies' requirements, not requirements, I'll say. Okay, here is the point. We should have written off some loans in 2020, not 2021, but in 2020, we should have written off. But what happened is we changed our accounting system to IFRS for MFIs in general in Ethiopia. Banks started to change their accounting to IFRS in 2018. Ours was 1 year late. We started in 2019. Now, there are certain requirements that IFRS requires, which I can't explain. Okay, don't ask me, I don't know. But what I know is because of that, we have to really use still provisioning based on IFRS rule as well as the central bank rule. The central bank didn't change its provisioning requirement. IFRS requires another way of measuring, such kind of risks. There are some techniques that IFRS uses. I think probably some of the professors here could help us what that means, if anything. But personally, all I know is, I can tell you is, we continue, to use both policies, and according to that, what there is a reserve that we maintain for each. Usually the requirement was, I'm not mistaken, just impairment, they call it, just impairment, how you have to treat each to compare IFRS and the prudential requirements of the regulators. And we have to somehow keep a reserve. But because of that, or some technical things that I can't explain, we didn't have to write really in 2020. Probably if it is going to be written in 2021, or whether, this IFRS requirement eliminates completely writing off, I'm not clear. I don't really know. But what I know is we didn't clearly write off because of this errors that has to do with IFRS implementation. And whenever there, in terms of provisioning and maintaining a reserve, definitely we have maintained, but it's just enough. I think we may have to see that separately, but that's all I can say. So write-off was not done in 2020 because of something related with the implementation of IFRS. In terms of equity, okay, yeah, somebody has already from the management team. I'm also happy that people were interested to invest, and that's a positive indication for me. Unfortunately, in Ethiopia, our law does not allow you to invest. What you could do is probably only come with debt investment, not equity investment. Even just debt investments, also there are some hurdles. One of the things is you can't directly invest, give debt investment itself. You have to come through guarantee mechanism. This is really unique to Ethiopia. The operational self-sufficiency ratio trend, I think that's excellent observation. That's already what I said. Since 2000, the El Nino, following the El Nino effect period 2015-16, when I say 2015-16, it is because our fiscal period runs from July to June. So it falls in two calendar years. So the operational self-sufficiency has been decreasing. One, costs were rising, productivity and efficiency gain was not setting off. There is also inflation in the economy. The Ethiopian economy has been facing inflationary pressure. And I think a combination of these things have really already reduced our the margins we have. I think that's why the operational efficiency ratio has been reducing. You can clearly see from the operating, my explanation is really operating efficiency, especially operating cost, was not really controlled. And because with the inflation, we have to, even very recently, I have to make again another salary adjustment just last January. We have to increase salary by 50%, 50% on average for all of our staff, literally, because of the inflationary pressure. Previously, because of the fear of COVID, even we didn't increase at the time. Now, since January, we have increased, but how much, efficiency gain and increase in portfolio or income, or I don't know what, are you going to bring? That's really one of the key questions that has to be asked. However, you raised also about, repeatedly, there was excellent discussion about the rural-urban focus. Now, for the urban, I think the dilemma we face, and probably as we move forward even down the road, one, I think Buusaa, personally, I have a strong opinion that still we are good experts at doing group lending methodology, especially for lower end of the market segment, meaning for the poorer segment, that's really the profile of Buusaa. That's how the organization itself has been really framed. So group lending, it has got weaknesses, no doubt about it. But moving to our individual, even for this, it's not either efficient or profitable or sustainable. But even for the clients themselves, they are not just eager to go from group to individual. We have tried several. We wanted some of them to graduate to individual loan from our existing clients. No, they said simply they refused. They have got really strong arguments. Individual. Yeah, I have to breathe so much. The question is, are we going to do it right? And is this probably as simple as changing and introducing it? See, personally, I'm not happy how I'm doing individual loan. Personally, and with my team also, I have a pressure definitely from my board, but also from the staff to go for individual loan. But for MFIs with really deep experience with group, and our group is even large group size. The average group size is 15 members. It is minimum 10, maximum 25 people. And just really the type of group. Even in urban areas, it was working quite successfully. It's only because of COVID that we have experienced defaults in urban portfolio almost for the last 20 years. Okay, it doesn't mean people were not facing a problem. Always people are vulnerable, and the people we serve are vulnerable. Their income is not always predictable and reliable. But the group has worked out really a mechanism to deal with such kind of things. So absolutely, my experience is with group, it was quite successful even for urban, provided really you have the right skill and technique to organize that group, how people select each other and what type of training you provide and some other additional service-related incentives you provide. These are very important variables, but we moved to individual loan, SME loan. It's not really like moving from rural to urban. It is rather to the rate at which the urban portfolio and clients are growing is quite larger than the growth in rural areas. In the rural areas, it has stagnated, outreach as well as. But when you look at some of the products, most of the growth was coming from the urban portfolio, as you correctly said. Now, we didn't really set a clear policy, but for example, I would definitely like to see, in terms of at least customer profile, the rural-urban proportion, I would like outreach, 50% outreach to be rural and not more than 50% outreach to be urban. So it's fluctuating, but we want to maintain that. But moving to urban with individual loan, well, there are several challenges that we are facing. So I think these are some of the things. And finally, how with the group are you going to maintain, efficiency and etc. Okay, theoretically, even not only theoretically, if you go to Uganda or to Kenya, digital solutions might seem to work, but I'm not sure. For lending, especially for lending conventional, project-oriented or business-oriented type of lending, I don't know whether that's the lending modality, the digital solution, whether it has worked or whether there is even a successful business model. I'm not aware, I don't know, but in Ethiopian context, I don't think digital solution is not really a reasonable option. And I question probably also with low-income groups, digital solution for credit, I doubt whether it's going to be. This thing probably requires still a balance between high-tech and high-tech. High-tech is going to be probably to remain, at least in my context, probably for the next 20 or another 20 years. I don't think the machines, digitals are going to replace some of the influence, the interaction, the pressure that comes from human interaction. And one of the lessons I've learned with the previous small film on that early presentation, and that was really shortlisted as one of the finalists. That's really what we are doing. I'm already trying to work. We have to still work on the business model further to make it scalable. But I believe high tech is not going to replace most of these things related with, face-to-face social pressure type of models like group lending or even individual personal lending with very frequent interaction, not really like a bank unless you have really a reliable collateral. So there, I think still the key is to increase efficiency is still to work on developing a high quality groups. And working really with people directly, not digital. So I think it's, at least in my context. So these are some of my observations, and thank you.
Thank you very much. I think you really tackled nearly all questions, but there is one during the interruption that was asked to you also that I would like to express. That is about the dividends. There are no dividends paid out, and question from the students was why not?
Yeah, yeah, that's really a $1 billion question. I just don't know. No, I think here is the point. As I said, 90% of the paid up capital came from the public money, from NGO. Then me and my colleagues, some 15 of us, contributed the remaining 10%. Now you can see the figures. If there are owners, we are the only owners, out of which we contributed only 10%. The 90% was a donor's money, but it is registered as paid up capital. Now, so are we going to pay the dividend to me and my colleagues only, or to the donor also? Because that was the equity that has brought this company to this place. And I think neither accounting nor the regulation has resolved this. Accounting even doesn't know such kind of investment, okay? And the regulation, the regulators, they don't know how to handle it. So for the time being, I think we made the decision not to take a dividend. Our purpose was not really to get return on this money. One of the considerations that we have to now, probably from now onwards, have to bring in is really how to make a real transformation. And one question probably for any one of you to research is, how do you even define the ownership of Buusaa now, where 90% of it came from donors, but those donors provided it just like any NGO credit grant, and some of them, they don't even exist. So, and the 10%, including me and my colleagues, we are there. We don't have really any moral authority to take that as it. Because of that investment to take a dividend, I don't believe that we deserve it. And our intention was not to get dividend. Why we initially invested was just to continue to serve this community. Okay, but legally, we should have taken 10 times or 20 times, and nobody can prohibit us legally because it's a private company. We 15 only are the owners, and that's it. Morally, however, no, it's not acceptable to me as well, to my board, and to some of key people that exist that work in Buusaa as well. So that's really the very reason why we didn't want to pay dividend. For the future, I think we have to figure out and we have to find some solution. Okay, I don't want that to remain like that forever, but that was not the intention that brought us here. Okay, how should we take it in the future? I think we have already started some level of discussion, but at least between then and now, no, there is no legitimate moral reason to pay dividend to the so-called current owners, including myself, who are the shareholders. There is no justification for that.
Okay, that's very clear. I go now to our together mode here to, if you can all put on your video, then we see each other again. So I will put you out of the spotlight. No, that was very clear. And as I said, with this last question, you tackled all the questions that were asked during the evaluation of the figures. I'm just watching now the group, and you can raise your hand, by clicking on the hand if you have some additional questions or to ask to Mr. Teshome. He's sitting at the back now of our class. I'm just looking if there is nobody specific. Is there already? I just asked the question again. Somebody who raises his hand or her hand for an additional question. I see somebody. Let's have a look. Yes, please.
Yes, it's Sylvia.
Yes,
And
Sylvia.
actually, I would have a very basic and very like just out of curiosity. You mentioned that your collection officers are using public transport. Didn't you have any accident with this carrying the money, I guess?
Okay. Yeah, okay. No, it's, oh, sorry. Can you hear me? Okay, yeah.
Yes, yes, perfect.
Yeah, no, we didn't have, there were 2 incidents throughout the life of the organization. And it was, I think one was in 2002 and another probably in 2016. At those 2 times, staff was, robbed at gunpoint. No, 3 times, yeah. In 2002, in 2008, and in 2016, staff were robbed, and that's the only incident. I think generally when, I know some of the East African countries, especially like Kenya and Uganda, I quite travel frequently. When I compare it with the context in some of those areas, no, Ethiopia is quite safe. Even today, my staff has to carry something like, especially during such kind of season, where farmers are repaying still big loans, especially up to February. Staff will carry something like 500,000 birr, and they have to use public transport. They have to walk on foot for about an hour to reach to the next transport route to get a taxi, minibuses, small minibuses, or what you call in Kenya, matatu. Then they have to take the money from the village to the public transport. They have to walk on foot. Sometimes the clients will accompany them. Sometimes when they feel that that route is not safe, some of the group representatives or even the clients normally advise them which route to follow, which route. And again, also when we negotiate, the meeting place at those village, they definitely advise, okay, no, we come to you to this place, not in our village. They usually say, because with the staff, they've got so much attachment, and the service is also important. So the point is, it's a good question. Still, majority of MFIs in Ethiopia still use similar approach. Some MFIs may require their clients to travel to the nearest branch office. Some, they go and just pick the money and carry it and come to branch office and deposit. So generally, Ethiopia is safe, generally, even today. And I think it's not a big deal to carry big money and come, but it doesn't mean it's risk-free. There is a risk, depending upon the area, the context, and the situation, but generally it is safe.
Okay. Another?
I have a question.
Yes, Karin?
On the savings, so we saw that the voluntary savings clients were low compared to, I would say, the compulsory savings. So I wanted to know whether you plan to encourage people to save voluntarily, and how can this be possible?
Yeah, okay. Yeah, again, I think that's an excellent question. First of all, when, as I said earlier, most of the MFIs are coming from NGO. Microfinance is a development innovation. So, and the institutions are also coming from NGO. We are not really known as deposit takers, despite the license to be deposit taking. So we were credit driven. And again, most of the MFIs, even in Ethiopia, okay, some large MFIs, especially government-owned MFIs, they have relatively succeeded in mobilizing saving from the public at large, but most of us depended on, compulsory loan-side saving or saving only from our customers' market segments, not from the public at large. Now, moving to saving is a completely different thing. And even with, I think the team of this year's European Microfinance Award, I strongly advise you what is happening with saving. From that report, I think you can learn a lot. One of the lessons is generally most of the, even banks, about 70–80% of their saving account is just dormant. They don't deliver value for the customers. Some of the accounts are not moving, their balance never grows, it's very dormant, nobody touches it. Once you open account and then it stays there. And still, the low-income groups are not coming to banks. Banks are not going to low-income groups because of their business model. What is a business model? All deposit business model is counter-based. Counter-based means you have to straight go and visit bank branch for saving or for keeping safe deposits. So because of that, I think Buusaa also, we have never, and like many MFIs, we were credit driven. We are now trying to move away, but how to move? Are we going to compete of advertisement and intensive, investment on brick and type of office, or effective for the institution? Currently, it is only effective for the institutions, for the banks. All deposit products and the business model, not product, not the product. The business model of saving is all driven by banking, and that is branch. For busy people that cannot move from their business, just open business at 7 in the morning and close at 7 in the evening, that type of service may not be really relevant. So that's why we have started to innovate, and that's what made us also to be one of the finalists. I'm not suggesting that saving is not necessary or does not exist. What I'm saying is to really deliver value while also benefiting the institution, not benefiting the institution only, but to make it a really deliver value for both, for the MFI and for the clients. We need to work on a different business model. That is what we call the JAF or door-to-door. But just I think one of the interesting potentials there is my staff has to travel, as you have seen on the film, or every week or on agreed upon day. You have to strictly manage the location, the distance they travel, the pickup time, etc. And this is really for relatively densely populated urban areas, for not rural areas, for rural. So in urban areas, that's what we're really working on, a different business model to attract savings that can also deliver value for the clients, meaning it can be used, frequent deposits, but also the balance can grow so that the customers, the low-income, build financial assets. So briefly to answer the question, I think we are working on deposit mobilization business model, not only strategy, but also a business model from scratch. and we have to prove that to be sustainable. It is a high touch, very frequent, goal-based type of, saving mobilization, and it is like competing with informal deposits, like what you call in West Africa, for example, social collectors that go from door to door with the traders, and they pick the money and keep it in safe deposits and then give to their customers when they want it. So that's really the kind of business model that we are working, and we need to work on saving with developing a very different, innovative business model, not only just a saving product.
Okay, I see the hand of Sylvia. Is that a new question, or was that the old hand? No, it's gone, the hand.
No,
but I see
it is for me.
Okay. Mulu alam.
Yeah. Nice to meet you, Mr. Teshome. I can't say that in Amharic. እንኳን ደህና መጣህ ብያለሁ. I have a question.
Salam ብያለሁኝ.
Salam. My question is regarding to your loan product. I was very wondering that I have not seen any loan regarding to cattle production or livestock. I expect that in RC there was many cattle or livestock production, and I see that the urban clients are more exposed for urban instability, and also even the pandemic also affect highly for urban economic activities. So why do not focus on livestock production in rural areas? Thank you very much.
Okay. Yeah, thank you. It's a good question, a nice question. I think this is also, I fully agree, Ethiopia is still 80%, and being a 100 million plus country with 80% population, rural means agriculture related business or anything related to agriculture is simply as relevant as 80% of the population. So I think this is a very good issue. Yeah, we are doing what we are doing differently. One of the things I think probably what makes Buusaa a little bit unique is, in Ethiopia, the government has been providing input loan for several years, and since 2008 or 9, they abandoned it. Now, farmers don't really get directly input loans. Partly, of course, there is also a problem with our input supply chain. What we're doing is one of the unique things that we do exactly in the localities you mentioned is almost we started since 2011, and we provide agricultural input loan, agricultural financing, specifically tailored on the purchasing of seed, the purchasing of fertilizer and agrochemicals. And why this is unique is, one, we directly involve in the sourcing of the seed itself. Farmers cannot, just for those of you who don't know, I think for Europeans probably it's difficult to explain, but for most of my African colleagues, you can understand. The seed sector is strongly monopolized by the government, and it is distribution and through corporate top-down and government controlled. Most of the cooperatives, the primary cooperatives, which are farmers organizations, are really not as responsive and as not customer oriented. So what my staff does is, between April, May to August, my staff has to go and collect demand from my farmers, clients, the demand of the seeds they need and the variety. We deal only with 2 varieties, wheat and mulch barley. Previously, we were dealing with maize as well, but now we are focused on mulch barley and seed. And then we source the seed we process the loan, then group farmers representatives from the credit groups and other structures. There are some other methodologies that we use, what is called rural service facility. These groups are representatives after we have sourced the seed and we effect the payment on their behalf. So what we do is we don't give the loan, the cash, the loan in as a cash. Rather, we pay in the name and on behalf of each of the farmer borrowers that's interested to buy the seed or the inputs, we pay on their behalf through the supplier. So for the which we pay to the cooperative in location X or Y. For malt barley, we work with Heineken breweries, which is a Dutch, I think, based company. It's a global company, I think. We have a valuation financing agreement with them. So we pay on behalf of the farmers by the name of each of the farmers, and the farmers group and myself will take delivery of the seed from the seed store. The transport is probably 100 kilometers, 60 kilometers, sometimes up to 200 kilometers to the village of our customers. And then the group leaders will take distribution of the seed. So it's a very awkward, difficult type of work because we have to really talk to several stakeholders. Then when it comes to input, what you call this agrochemical, for example, I have to negotiate with a scientist, which is an importer. Then I have to pay in advance. Then find a demand based on the demand of the farmers again. Those chemicals like pesticides or herbicides has to be transported again some 300 kilometers from Addis to RC areas and distributed to the farmers. Fertilizers is normally locally available in most of the village. So it is only the seed, and the problem with the seed is one, its quality, and the most important one, accessibility of the service itself is not available because the cooperatives don't sell to individuals. They sell only in bulk, meaning you have to buy a minimum of 51 carload, which is 50 quintals, and the distance traveled is also, 60, 70, 100, 200 kilometers. It's very difficult for farmers to get organized themselves and buy. The cooperatives theoretically distribute finance. They don't have the capacity to finance. We try to work with them, and there are several operational issues that made it difficult. So we are directly lending almost seed, I would say. So the point is, I think, as you correctly said, cattle seed, not even in RC, when you take to the north of Addis, like around Salale, starting from outskirts of Addis, around Sululta, our Abbai Gorge, meaning some 200 kilometers, that's really a good milk shed where financing for milk cows is more interesting, and we have started a pilot project in that area. But in this one, from the agriculture point of view, we are financing really a wheat and malt barley value chain for agricultural financing. That's where the segment we have seen an opportunity. And another important aspect of the malt barley is the farmers also directly, if they want, and we link them, they directly sell their produce to Heineken breweries. Now, I think there are some malters also that are coming. It is really a mutual win-win situation. Farmers badly need seed, quality seed, and they need it on time. The brewers, the malters also need the malt produce the crop itself. So for their malting, so they have got really an important stake, and that's really what we on every year. For example, except this previous current year because of COVID, in the previous year, every year almost we finance a minimum of 12,000 hectares of inputs through the seed value chain financing. So we are playing in agriculture directly, but not really. We selected the seed value chains as more promising and more value adding for the farmers also. Thank you.
Thank you also very much. I think this whole training is about, I will perhaps to mute it. Yeah, the whole training is about the story behind the figures. And I think this is a very lively story that you have told us. And it's much more, everybody has understood, it's much more than just figures. It's not just banking. Microfinance is looking for very creative solutions, very customer centric approach of your organization. So therefore, I was also very happy that you joined us here and that you told us the real story of Buusaa Gonofa. I think that everybody has learned a lot of it. Mr. Teshome, we normally do have, during this session, we work with colors. If everybody can put on his camera, who is around? You know, we have always questions here in the group, and when people have to answer, they can say true, that's green, red, it's false, and yellow is when they don't know. So I think for the end shot of our training today, I would like to have your opinion about the session with Mr. Teshome. If you agree that this was a good one, we see the green. If not, you can show the red. And don't look to the jerseys. So, Mr. Teshome, your microphone is muted, but it looks like everybody is showing green. So thanks very much, and an applause for you. And also, students, I must say this week was a very intensive week with a few evenings, and it started very early this morning. But I appreciated very much your input, the way you worked. It was a bit awkward, the way of working like this, but I felt like a little bit like being in class, and I really hope that there will be an opportunity to meet all of you in real life one day. So I wish you all the best, and Mr. Teshome, thanks again, and applause for you for joining us from Addis.
Thank you. Congratulations also. Thank you, guys. Thank you. Thank you.
Oh, thanks a lot.
So we have come to an end. As promised, I will send you the full presentation. The recordings are also available, and if there are any questions on the first slide, my email address is available, so you can always send your questions right to me. I wish you all the best, and we see each other back somewhere in April for the test. But if you are doing the same as I've seen today, this will not be a problem. So thanks very much, and have a very nice your weekend.
Thank you.
Thank you.
Thank you. Bye.
Thank you.
All the best.
Thank you.
Thank you.
Bye. Who will be the last? Huh?
There's question coming again. Okay, it's fine. Just next time.
Have a nice weekend.
Yes,
Bye.
you too. Thank you. Bye.
Bye-bye, everyone. Karin? Yeah, do you have the PowerPoint we made, or is it with Fernando? Could you send that to us, please?
The PowerPoint.
The bullet we had for the presentation as managers. Do you have it?
We will ask Fernando.
Yeah, we need it. We need the materials to put it together, and you understand.
Yes.
Yeah, I'm trying to check on Fernando's WhatsApp. I don't know the number. I don't know his name is using on the ULB group. So do you know that? You could ask him to send for us.
Yes, I will.
I think is it the one he's using with is it from Ecuador, right?
Yes, from Ecuador, but I think it's here in Belgium.
Yeah. I was just trying to figure out his number to write him privately to ask to send it to us. So because his name is not mentioned here, but I see UEX Ecuador, so I think he's the one.
Yes, I don't have my phone here, but I will check.
Guys, you're still there.
Yeah, Christian, we just wanted to ask Fernando to send the PowerPoint we made so that we could have
But
it.
you have to pay attention because there is many wrong thing in the paper that we did.
Yeah, of course, we need to do the adjustments. It's not wrong per se, it's the way we present it. I think those two feel wrong, but it's the way we mention it.
Okay.
The question today wasn't bad per se, though, so because it's interactive. Okay. Karen, go and enjoy. The babies they are waiting for you. They can't wait to see you. Bye-bye. Have a nice weekend, Karen.
Yes, you too. Bye.
Bye.